Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of being self-employed, working for yourself, running a small business. So today we're going to talk about one of the VAT schemes, and that is the flat rate scheme. Before I talk about that, if I could ask you please to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as finding other information that we have available on a whole host of topics, all aimed at supporting you in your self-employment. So on then to the VAT flat rate scheme. So there are several different VAT schemes that you may find may be helpful for you in your individual situation, all aimed at making the VAT process smoother for you and as easy to manage as possible. And what the scheme that we're going to look at today, as I mentioned earlier, is the flat rate scheme. So the flat rate scheme works on the basis that HMRC have worked out for individual industries how much VAT they would expect somebody in that industry on average to be paying. And by using those percentages per the industry, then the flat rate scheme was developed. And so this is a scheme that's available to help you to make VAT accounting much more simple than the standard. So obviously, ordinarily what you will be doing is every sale that you make, you will be calculating the VAT on your sales invoices. And at the end of the VAT period, you would be reporting to HMRC the total amount of sales invoices that you've raised, your net sales, and the total amount of VAT that you've charged and collected on those invoices. And then you would be doing exactly the same for purchases. You would be calculating the total amount of purchases and the total amount of VAT that you've paid within those purchases. And then when we get to the end of the period, you will be reporting to HMRC the total amount of your net amount of your purchases and the total amount of VAT that you've paid. So then at the end of the period, you're reporting to HMRC your net sales for the period, your net purchases for the period, and then you're also reporting to them how much sales VAT you have charged and how much you've paid out. And then, of course, you would pay to HMRC the difference between what you've paid and what people have paid you and what you have paid out. Or if you've paid out more, you would receive a refund. So that's quite straightforward. But of course, you do need to have the transactions to some extent for other accounting purposes. But the flat rate scheme aims to just work on your total sales. So you still charge your VAT to your customers or your clients in exactly the same way that you would do if you were doing standard VAT. But then what happens is at the end of the period, rather than calculating all of the individual transactions, and the same for the purchases, what we're doing is we're just assessing the total gross value of the sales made in the period. So of course that means the net sale plus the VAT that was charged on top. And then you, depending on the percentage that your industry has been allocated, that is the percentage of those gross things that you would that you would pay. So if, for example, through the period you had invoiced £1,000 plus £200 VAT, so your gross sales for that period are £1,200. and let's say for ease of calculation that your industry percentage is 10%, then the VAT you would pay to HMRC would be 10% of the £1,200 of your gross sales, i.e. £120. So you can see straight away how much easier that is to be able to calculate the VAT, and can save obviously a lot of time from having to calculate all the transactions individually. So then, of course, what you need to be doing is to be thinking, well, am I working the same as the average in my industry? So if I actually calculated for the same period how much VAT I charge and how much I pay, and take the difference, is that more or less than the percentage? And this is how, of course, that you can work out whether that is the right scheme for you. So a couple of things to note on that, of course. So the first year that you are VAT registered, if you go straight onto the scheme, you get 1% deduction from your industry standard. So whatever your industry rate is, you pay 1% less in the first 12 months of being VAT registered. So in the scenario that we just talked about, where your industry standard was 10%, so in the scenario where we had 10%, you would pay 9% in the first 12 months. So in that example, where the gross sales for the period were £1,200, so ordinarily you would pay 10%, so 120. But in the first 12 months, you'd only pay 9%, so 108. And then at the end of the 12 months, it would just the discount wouldn't be applied, and you would just pay the whatever your industry standard is. And in the description, I will pop a link to where you can go on gov.uk to find out the flat rate scheme and percentage specific to your industry. So it's just a case of looking down the list and finding the nearest that describes what you're actually doing. And if there absolutely isn't anything on the list that really is anything close to what you're doing, then there is a sort of a standard any other activity that's not listed, and you can use that. So of course it is really important that you are actually looking at the activity and not just trying to find the lowest rate, because of course the rates are set on the industry standards. So of course, an industry that doesn't have, for example, a lot of purchases or a lot of costs may have a lower percentage, because that industry, the percentage would be lower that HMRC would be expecting you to pay. Whereas obviously if you've got high costs, they would be expecting, if you were doing normal standard accounting, that you would have a higher percentage. And so that is how they are assessed. So of course, if you don't use the correct percentage, then and then once this is picked up by HMRC, then of course you will have had an underpayment, and that could incur penalties. So it is really important. And if you're not sure, do phone the VAT helpline, who will be able to help you if you explain to them what you're doing, to find the activity that is closest for you. So as you can see, this the flat rate scheme, as it's called, is a very useful scheme if your operations are there or thereabouts of your industry average. So by that, as I explained earlier, if you work out what you would pay on standard VAT accounting, and then compare that with your industry percentage and see how much you would pay, then you can see whether that's a worthwhile scheme for you. What I would say as well is, if you are just starting out, then just be aware that some of your costs that you may make initially, you may find that they're just things that you're purchasing as a one-off, and that going forward, will that be a correct reflection on your VAT? So when you're making any comparison, then that is important that you take that into account. A final point to mention is limited cost businesses. So this is businesses that only have very small costs in relation to their turnover. So we're talking about if your costs are less than 2% of your turnover throughout the year, or if they're less than £1,000, if your costs are over 2%, then you will have to use a limited cost business percentage, which is typically higher than all of the industry costs. But as I mentioned, I will pop the link in the description for the percentages, how to find your percentage, and then you will be able to work out what your percentage is for your individual business, and then you'll be able to assess whether this scheme is the correct scheme for you. So I hope this helps, and thank you very much for watching. Please do subscribe to the channel. Goodbye.